Good day, fellow investors. One of the stocks that nobody asked me anything about over the last few years, but there were a lot of questions in 2019, and that is Diageo, however you pronounced it, sorry. Here, I remember when the stock went up, I had so many questions about it. Now that the stock didn't do anything for a few years, but likely the valuation improved, now I have no questions about it, which is very, very interesting because the company kept growing, went from 13 to 15 more billion in revenues, has iconic brands, Johnny Walker, the name of my dog, by the way, official name, we changed it to Peps, but okay. And okay, investing, good brands, you would say good business, and it likely is a good business. But when it comes to this, you look at it and, okay, now they are investing and building a business model based on desire. So the age of desire, that is of course not value investing, but they offer things that offer growth, they focus on that. They want to go for faster growth because that is what pushes the stock higher, and that's what the market wants. That's what they have been doing. But this is very interesting. So they do minimum buybacks here, then really pushed on those buybacks here, and that's usually what happens with businesses. And let me show you Diageo stock. No buybacks, big buybacks, okay, and now even more buybacks as the stock is higher, which implies that they will keep on growing forever. Of course, they are paid to think that, but understanding that and investing now doesn't really fit me. Let me show you. So I've done this, the Carlin value investing quadrant, and let's put Diageo here, and then let's see, okay, what is the risk? So I think that the risk might be a little bit higher because of that desire to, let's say, focus on that business model, and therefore a little bit higher than a normal company that doesn't depend on consumer preferences. On the risk and reward, I think the reward is with a P ratio of 20, somewhere in the middle if we take the middle as the market. So nothing wrong with it. Likely good businesses. I don't drink alcohol, so I really don't know about the products. But it is something that many of you are interested in. So if we put this into the quadrant, I would say higher risk a little bit for medium, likely market-like returns. We discussed Shell recently, and at this moment in time, I would put Shell, for example, at a higher risk level and at a lower reward because of the cyclicality of oil. And let's say really I don't like Shell, so somewhere here. So that's something that says, okay, this is already better than Shell, but then again, you never know where the stock will go. So I'm not going to invest following it. If it is an interesting market-like good business, if you invest in it, likely you will not do bad over time, but again, maybe not even stellarly, spectacularly. And we as value investors focus on low risk, high reward businesses. So something here. Thanks for watching. Check my research platform, and I'll see you in the next video.